Hello, everyone, and welcome to this morning's webinar. I'm Jason Berry, Group Sales and Marketing Director here at Crystal Specialist Finance, and I'm delighted to be hosting today's event. And what a Christmas cracker we have for you. So lots of festive fun, and I'm joined by four of our industry's best known and absolute true heavyweights within the sector. So I've got Marc Goldberg joining from Together, where he's obviously CEO of the commercial finance. I've got Adrian Moloney joining from OneSavings Bank, where Adrian is Group Sales Director. Keith Street, who's Chief Commercial Officer at TML, and our very own Jo Breeden, who is Managing Director here at Crystal Specialist Finance. So good morning, gents. How are we all doing?
Good morning.
Morning, Jason. Morning, guys.
I see nobody else nobody got the memo.
Jumper.
Did you not get the memo? It's Christmas jumper day. Christmas jumper day.
Listen, I never even got the memo, Jason. I work with you.
You know what's funny? Everybody in my office today has got Christmas jumpers on, Jason.
Oh, really?
You're fuming, aren't you? Bet
Yeah.
you're fuming with that.
I'd have fit right. And the problem I've got is I can't fit in my collared shirts anymore. Now I've been in lockdown. But listen, just to set the scene for today. So for the audience, really. So we've got 60 minutes of Q&A, and so there's no presentations. And what I'd encourage as we actually go through the next 6 minutes is 60 minutes is that the audience actually shares various questions with us, so we can actually answer as many of those as possible as we run through. And any that we don't get covered, any that we just run out of time on, then what I promise we'll go back post the event and really just make sure that we get them answered. So every single question that we get will either be answered live, or alternatively we'll get it covered post the event. So I suppose without further ado, then our first question is an advanced one that we received from Scott Howitt of Chartwells. And he makes a statement really. So 2020 has certainly been a year everyone on the panel will be maybe glad to see the back of. But what are the key learnings? So what are we taking forward into 2021? And probably start with you if I can, please, Marc.
Yeah, I mean it's interesting. I think the one thing we have learned is that technology plays a key part in the future of our business. I think Together we've certainly moved our probably technology platform in 6 months, probably 3 years further than when we would have been. The working from home, I think, comes with its issues. I think one of the key things for me is well-being of our colleagues, but also well-being of our customers. What effect this will have, and that's really been a focus for us. I suppose, for me, we had a meeting in April at the office with our group execs, 6 people sitting in an atrium of where we normally sit 200 people. And I think the key thing for us is we decided on 4 pillars. One of them was back book existing customers, regulation, automation, innovation and transformation, and lending. And something, we're sticking with those 4 pillars in 2021. I think it's critical. But I definitely think technology has been the big learning for us, and the fact that we were able to run a business and still fund business and still deal with customers who needed our help and support at a time where everyone was working from home, which actually would have been unthought of before March the 23rd. So I think they were the learnings for me. I have to say a big thank you to every single colleague that works at Together, because I think they've done a fantastic job. But I do worry about their well-being, because when I was doing on a Zoom call yesterday, and somebody's kids was running around and smashing the place up while they're trying to have a conversation with me, can't be easy, and it does take its toll, certainly on people's minds and health. And that's the big worry for me for 2021, what toll this will take on customers and colleagues.
And could you see yourself, Marc, maybe giving employees the choice of that working environment next year?
It's interesting because, number one, I don't know about my fellow panel members, we haven't got the technology to be able to monitor exactly what people are doing from home. I think, there's a large part of our colleagues that are doing an unbelievable job. I do worry sometimes that if somebody is ringing up having a collections call and someone's mum, dad and aunties, uncles are all in the kitchen and they're all hearing it. So you do have to think about that. I do think one of the key things for us is flexible working is definitely on the agenda for 2021. We've just done a questionnaire to our colleagues. I don't see people working from home as a full time, if I'm honest with you, but certainly some people may be working a couple of days a week from home, or basically having people who can't get to Manchester as quick. Maybe they work a week from home and then a week in the office and things like that. But certainly, I do think that flexible working will definitely be a big part of what happens. Definitely together, and I think in the whole country during 2021.
Okay, thanks. And same question to you then, Aid, really, in terms of, I suppose, learnings carrying forward into 2021. It's been a big year for you guys, lots going on.
Yeah.
And what about next year?
Yeah, well, look, so we're just 12 months, just over 12 months into the combination. And I guess that would have been a lot tougher if we'd have done it this year, to be fair. So getting a year under our belt is really good. And we've made significant inroads into that and developing a really strong multi-brand strategy. I think Mark's point about tech, spot on. I've probably seen more advances in technology in the last 9 months in the mortgage industry than I have in the whole last 20 years. Yeah. And I think we'll all utilise that a little bit going forward. I think 2020 for me, for the industry, actually, look, if thinking back to April and Joe and I were talking while he was working from home, would I take the position the industry is in today to where I thought it might have been in April? Bang on, this has been a good year to be in mortgages, because probably we're in a little bit of a bubble compared to other sectors of the economy in that we actually have seen a V-shaped recovery. So you think valuation stop, bang, bottom of the V. The market's come back pretty quickly. I think, I can't speak for the two guys, but I'm sure they'd say they're busy like we are as well. Volumes are good in all sectors, whilst managing some risk elements, because I think that's important as well. And I think 2021, if we get through the first 3 months, see what the fallout perhaps is of Sunday, maybe, who knows what will happen with that, but also see, what happens with the end of furlough potentially. What will stamp duty be extended or not? I don't know the answer to that, but I think we're all going to have a very, very busy quarter one, particularly around completions, because I think that is stockpiling up. But I think, lessons learned. Mark makes a really, really valid point. Look after your colleagues, look after your workmates, working from home. I think we've all done it. Was it 9 months now? I mean, probably fortunately, like you guys as well, I spend a bit of time in the offices. But for those guys that have been there all the way through at home, it can be quite mentally tough. And, I guess we've all stared at Zoom, WebEx or Teams screens for quite a lot of time. But look, I think the big bit for me is the market's in really good shape, a lot better shape than perhaps I thought it would have been at the end of April. And we should all be pleased with that. And particularly in the specialist sector where we all play, I think that market is really, really strong at the moment.
So, and would you say similarly, Keith? So we never actually reached, from what the guys are saying there, we never reached ground zero in terms of where we could have gone in terms of COVID. And it looks like it's been a successful year for TML. And what are you taking forward into 2021?
Well, firstly, I'd just like to thank you for introducing me and the other colleagues as heavyweights. I didn't realise you'd been looking at my bathroom
nice
during this period, you little bugger. But anyway, no, back to the serious matter. I can only echo what the other two guys have mentioned. Tim, we were quite fortunate being a younger company from a technology and working from home. That was always on our horizon anyway. So we were able, fortunately, to move our operations to a remote basis fairly quickly. And I think that paid some dividends for us. I think it's advanced the need for technology. And we have talked about this, as Adrian said, for hundreds of years. We've talked about technology and we failed to get on it. Let's be honest. you know, we'd all be very wealthy people if we were, you know, if we were remunerated on the amount of time we talked about it. So now it is fast tracking, and the differentiator for me, for organizations that will be very successful, will be the ones that can embrace this. Wherever you are in the chain, whether you're a business writer, whether you're an aggregator, or whether you're a lender, and you know, bring it on as far as I'm concerned.
Okay.
I do worry a little bit, you know, about Brexit and you know, this how quickly we will get to whatever the new norm is in the world, and I think there are still some questions to be asked. But I would just ask people to keep a level head. You know, do you remember we all thought the end of the world was 2008, and you know, but actually those of us that have got grey hair or some hair actually can assist in these times, I think, and you know, there will be a requirement for business to be written. Adrian said we have been fortunate in financial services, in mortgage lending. The demand has been really high, both residential and buy-to-let, and we know some of the reasons for that. So I remain. I've a plan for the worst and hope for the best, I think, is what we're doing.
Okay.
I think, Jason, you know, just going back to your point, I think if everyone looked at the projections, I was just thinking when you asked me then about when we started this, we kind of did projections with no redemptions and no payments, and it was bleak. You know, it has only got better, but we all need to be mindful that we are still in a bubble, and the furlough is still in place, and people are still getting CBIL loans, and all these things need to come round and come out of there. You know, 3 of the biggest retailers in the UK have unfortunately gone by the wayside in the last week or 2 weeks. 45,000 people who will be unemployed. So I certainly don't think that the worst is past us yet, and we need to be mindful of that. But certainly in our industry, I think the green shoots are there, and I think if you're well placed, you've got your technology platforms, and you look after your customers and colleagues, you've got a really good opportunity during 2021.
Great. And going to Jo then, so technology and transformation, Jo, seems to be the theme from the lenders here, and also I suppose with Keith's point about your life experience and making good decisions based on maybe previous experience, but technology and transformation, and what about, again, linked to the question I initially asked, 2021 for Crystal in terms of what we take forward.
Yeah, I mean, look, we're all doing it to try and make the customer journey as best as it possibly can be, and I think reducing admin has got to be top of everyone's list. Working lean, cutting out waste, all these things. And whilst I do believe that tech and transformation is unbelievably amazing, I do also understand that people working from home brings with it inefficiencies. And it's whether we can compensate enough, from positive customer outcomes from tech that mitigates against the working from home bit. Because again, I can only talk about my business, and amazing, sort of wartime atmosphere around here, and how good it's been that we've been able to mobilise the business in record time off site and or Zoom and this and the other. I still know that there's no better outcome for that customer experience and journey than us having a human interaction and kicking around a deal or kicking around a solution, to a problem. So, when I'm looking forward to 2021, tech is a big part of what we've got planned. But I'm also really, really hopeful that this vaccine gets out and I can get the staff or the majority of the staff back indoors as soon as possible. To benefit the customer. It's not about an ego trip from me, or wanting to pat a couple of people on the back or kick a couple of backsides of non-performers. It's I always liken us to an ant colony here, and we're at our best when we're all together sharing and strategizing on a case and solving problems. So for me, that's probably the biggest hope for 2021, is that I get to have more colleagues back on site.
I think, Jo, that's it's a really good point. And I think Mark said, obviously, he's in the office. They're all wearing Christmas jumpers there today. Obviously, his is hung up in the background somewhere. But, I'd echo a bit of what you say there, because we've been fortunate enough. We run 3 sites in the UK to be able to get our underwriters back on those sites, because the ability to talk through cases with more senior underwriters, or they have the heads of underwriting departments there for the more complex deal to share those thoughts, has worked really well for us, and has helped us manage some really good service levels during this time. Because I see the traditional underwriter when I go in the office, two large screens, post cases, being able to work through them. You can't do that from your sofa with a laptop, and that has enabled us to be really efficient in that respect. And also, the guys love being in the office with their colleagues, seeing their peers working together. And I think your point is spot on there, Joe. And I think that's why, if you look at the real vanilla prime end of the market, the big banks have struggled with their service, because they've not got thousands of people in their offices being able to work together and process volume. So I think we're really fortunate, really grateful for our staff that have continued to work in the office through this. But I think you've got it spot on. It makes the business and be able to move the industry wheels through a lot quicker by having that flexibility.
It sounds like there's a balance that I suppose we're all trying to strike. So I think we're all recognising that there's a definite productivity and an efficiency when there's that office environment, and whether that's an underwriter or whether it's somebody else on an administration point, that ability to just bounce ideas off and sense check is absolutely crucial. I think interesting, I was with the press yesterday, and they were talking at a similar level. They were talking about the reporters, and just one of the editors was saying how some information had gone out into the press yesterday where what would have been the subject line and what would have been the main point was actually quite low down in the piece. And I suppose there's just a little bit of similarity, albeit in the media space. But I suppose
just going back to your point there. Sorry, Jay, to disturb you, but for me, the graduates and apprentices that they look to us for guidance. And basically, I've got probably 20 people who are young people who've come out of university or come out of school. To be dead truthful with you, they need to interact with people. They learn the knowledge, the understanding. They're looking to us. And to be truthful with you, it's just not happening. And that's a big problem for I think in the whole country, about the young people of today. Anybody that finished school in July or and we've been looking for jobs, this is something that we need to really focus on as an industry and as a UK environment, because I worry about those people, because they're losing the learning ability. But not only that, they're sitting at home, some of them in a 1-bedroom flat where it's just not conducive for them.
Their working hours are all left, right, and centre, aren't they? That's the other thing. You think about the well-being.
Competency is not all you need. To be successful, and you need interaction with others, you need to learn from others, etc. We've been unfortunate because being in Glasgow, and they've got it's a strange satanic land up there, and they're in a tighter lockdown, so we can't bring our people back, and we've kitted it all out ready to be COVID secure, but we're just not allowed to at the moment. But people, I agree, and training and development. You try holding a training course on a Zoom. It's just not the same. So, whilst we embrace some of the benefits, but clearly it's not going to be binary. I think there will be opportunities, but as Mark said, you've got to. The social welfare, etc. I personally would, I'm zoomed out. I don't know.
Well, you know what? Link to Mark's green shoot message. I mean, what? Just before we go to the questions from the audience, because they're coming in thick and fast. Probably just a final question before we turn to those is those. We've mentioned some green shoots, but what are you most excited about, and what should the audience be most excited about in terms of 2021, Mark?
Listen, for me, property, there's certainly no shortage of liquidity in the market. Having money sat in a bank at paying out 0.1, 0.2% is just not viable for people. So I do think residential property is a good investment. I think the divorce rate is going to be higher than ever. So I think there's a great opportunity there for people to obviously buy.
That's just in your household, that, Mark.
Well, absolutely, but she's just sent me the message now. Anyone got any cheap property for me to rent? But I think young people who've lived with their mums and dads in lockdown are saying that need to get out. So I think the rental market market will be strong. I certainly think that obviously with the lockdown, the first lockdown with 3 months of the property market, we've seen a lot of properties that we had for sale pre-COVID sell for over and above what the prices we were trying to achieve after lockdown. So there's a huge demand there. And I think, you know, for me, the main high street banks are going to be that tied up with the loans that they've given the CBILS that for us, I don't think they'll be interested in the buy-to-let market, and I don't think they'll be interested in the mortgage market. And I think a lot of people are going to struggle to get a mortgage because they haven't got the deposit, the income multiples are not there, and everything else. So the rental market for 2021, there's going to be huge demand. And just to give you an idea of that, I've had 3 of my properties come up for rent, or the tenancies have expired. And I was thinking, oh, what am I going to do? All 3 of them have rented out with 26 people chasing it. And my rent has gone up by 20% on all 3 properties. And I've had no shortage of takers. And that's just me. So imagine what the opportunities are. People are fighting over good quality properties. So I think from our perspective and from anybody listening to this, I think there's going to be big opportunities in 2020. But look, giving a good service proposition to the customers is critical, and cutting out that cost.
Well, those properties can't be in Manchester because that's COVID central. So elsewhere. I didn't know you had properties all around the country. Hey, but you've obviously got a proposition which is an amazing proposition, OSB. So yeah, Marc talks about the opportunities on the specialist side. I mean, what's the most exciting thing you guys are focused on for next year?
I can't tell the 2 guys what we're going to do. They're competitors, But look, I think that we as a market, we've seen some bumps on the road. I think we're all in a pretty good position going into next year. The more you can go through the bumps, the clearer you can see the exit, and that's where you get certainty about what you want to do. I think you're already seeing, we've come back and opened up all of our product lines, whether that's commercial through Interbay, bridging through Precise, and buy-to-let through the 3 brands and the resi through Kent and Precise as well, all with big demands for all of the product sets. I mean, I think the one bit, because the audience is intermediaries, it's going to be a big year for brokers next year. To the point Marc said, getting a mortgage in some instances will be harder because of credit blips, divorces. Definitely see a few more of those, I think. But also it's competitive. There's no liquidity problems in the market at the moment. This isn't a credit crunch. Lenders are actively out there looking to lend. You're seeing some go up the risk curve already. I'd normally say that's because they're not doing enough business, but that's just me. But I think, look, having commercial lenders out there competing again, that's really positive. Sensible bridging lenders that know what they're doing, that's a big bit, because I think bridging could be handy in Q1, particularly if you're racing to try and get something with a stamp duty deadline. And look, we all do a fair amount of complex buy-to-let, and landlords, to Marc's point, I'm not seeing landlords slow down in buying and remortgaging and taking finance. So if I'm a broker in 2021, I'd be feeling pretty good at the moment.
Yeah,
Joe, and as a distributor then, and you obviously listened to a couple of the comments there. So how excited are you for certainly the first quarter?
I think it's huge. We've been working with our big property investors that we dealt with for many years, and they're licking at their lips for next year. They're seeing next year is literally an opportunity to potentially get if there is a dip Q2 in property prices, I think there's an opportunity there for them to get a few bargains cash wise. I think it's interesting to see and feel. I know there's some questions about this later on. The change in appetite that these investors are looking at. So HMOs being big for the last 5 years. I think we'll see the dynamic of that changing, because potentially maybe people don't want to live in HMOs like they once did because of the virus. So landlords are already mitigating away from that. So retail being a bit of a struggling sector, a lot of these residential investors are already looking at commercial opportunities and looking at refurbing them through PD. So look, we absolutely believe that next year will be a great year for the business. I think anyone who's made it through and survived this year, that they should have taken the time to review their own operational processes internally. I think when we can get more staff back indoors, I think they will see the benefits of all the hard work that we've undertaken as senior leadership teams in 2020. And I think it's a great time to be a mortgage broker. I think lenders are going to be more aggressive, leaner, more outcome focused rather than admin focused than ever before next year. And I think it will be a landlord market rather than a residential market for me.
Okay, I mean, you mentioned HMO there. We've got a question in from Vicky Wild. Vicky's asked about HMO buy-to-let case. Basically, she's got a tenant who's on a 1-month AST, non-UK taxpayer, money's payable in sterling, but pay slips are in dollars. UK resi property. Is that something that how easy would that be to place on the panel, Joe?
Pretty easy. Pretty easy, that one. So I mean, obviously, I'd have to know the exact numbers and work out what the yield is from the AST. But absolutely, we could get that done up to 70%. Right. I need to know a bit more of the numbers.
Okay. I mean,
certainly not mainstream, that one.
All right, great. Well, I saw yesterday. So Airbnb, I think, were floating yesterday over in the States. And Ian Bowden from Swoop Finance has asked a question, which is it's linked to resurgence in 2021 of landlords, building on the theme we've just been discussing, but more landlords using maybe short-term lets and Airbnb. And Ian's question is: are lenders still generally willing to accept that as a tenant type? So that short-term let, Airbnb type tenant profile. What's the view? I mean, could I start with you on that one, Mark?
Yeah, I think. Oh, sorry, it's just that.
That's the pacemaker.
One sec.
It's the Airbnb alarm. That one. Airbnb deal alarm.
Right, it is.
He's rented another property. That's the alarm, isn't it?
It's one of the Airbnbs in the red light districts that's just come on.
Right, let's get back to the question. I think, listen, holiday lets is definitely something that I see a big increase in the UK. There's no two ways about it. I think as lenders, and I'm not speaking on behalf of my other colleagues on this panel, but I think it's fair to say it's all about affordability. So, with Airbnb, there is going to be void periods. You have to take that into account. So I think subject to affordability, the together common sense view on lending is that as long as we can demonstrate the customer has the affordability and you take into account the voids, at the end of the day, I think that is definitely going to be something which is going to be big. A lot of people don't want to leave the UK, even with vaccines. I see that the UK is being somewhere where it is a good place to go. I know a lot of people at Christmas have hired different places around the country. So it's a market that if lenders and brokers aren't thinking of it, they need to. And at the end of the day, it's working with the lenders to make sure that, for me, it's all about the income and affordability. And subject to that, I think we can get comfortable with it. It's something we did even pre-pandemic on holiday lets. And we used to look at Airbnb, but it's just making sure that you've got a void period and that customers that are getting into it, they understand it as well, because the maintenance on Airbnb and obviously holiday lets is far more than renting out a property for 6 months. It's costly, the cleaning, the people basically having parties there, destroying it, this, that, and the other. So, I think for me, it is more about that knowledge and understanding about the marketplace that they're getting, having that experience, rather than just somebody waking up one day and saying, I'm going to go into buying properties for Airbnb with their eyes closed.
Yeah, get it. And Keith, I saw you nodding your head there. And
I completely agree. I think we historically thought, there's something a bit strange about a holiday let, maybe, but all of us, if we've tried to get anywhere in the UK during this period, it's been challenging and it's not cheap. But I agree with Mark. You don't want people that wake up and think, that's the panacea, let's go and do that. But there will be, sensible people with properties that have got maybe a track record if they've done it before, or they've researched the location, etc., and know that there's going to be good demand. And at the end of the day, it's secured lending on affordability. Whether that affordability comes via standard tenants or holiday let, sort of, as long as we're comfortable with it, it's sort of irrelevant to end up in the same place. So I do think it's a big opportunity.
Okay. So affordability seems to be a key theme there, Aid. What you obviously different brands in the stable. What would your view be?
So holiday lets, I think I totally agree with Mark, and I think you quite often see they're set up in trading businesses. Sits very well with like a brand with Together or Interbayers, where you've got the understanding of the wider bit of the customer. Airbnb, I'm a little bit more pessimistic on. I like the product personally because I've used it when I've stayed in cities in different places and thought, yeah, really like the concept. I think if I was looking at Airbnb in 2021, and this is just my personal opinion, I think that market was fueled quite often by tourism. That's going to take a little while to come back. So, lending on it, I think is quite volatile. Also hospitality, we all hope that comes back soon, right, guys? But, I think that led itself to that as well. Where I see the challenges with Airbnb at the moment is the demand for it is probably not as big as it would have been in 2019 because the fundamentals that drive it are not there, which in quite a lot of instances is travel and tourism. Now, that's not to say it won't pick back up. But if you look at something like the London market at the moment, which is really interesting, is that you are seeing an abundance of people that let their properties through Airbnb historically, now trying to put it back onto the market in a more traditional tenancy type basis. And what you're seeing there, and it's if you look at some of the figures that are coming out from the landlord forums and things like that, is that rents in certain parts of central London are dropping as a result of more property coming back that historically, before the pandemic, were let on a short-term basis. So I have mixed sort of emotions on Airbnb. I think you can get it right. As a lender, you could get it horrendously wrong. But I think the big bit, definitely in 2021, there is the gap in the holiday let market. And if you do it right, you could make some serious money on that. Okay.
So Joe, from a distributor perspective then, and as a business keen to support and serve the intermediary marketplace, it sounds like these opportunities to exploit in that holiday let market.
Yeah, huge. It's just been able to get the right product in the right location at the right price. Because remember, lenders also, when you look at holiday lets, you can't all of a sudden just turn a bum buy to let into a holiday let thinking that you're going to get 25% more income. So it's just been, walking into it with your eyes wide open.
Okay, so rattle off a few of the questions that are coming in thick and fast. So one specific to you here, Keith, around TML coming back into the market with a residential range. So when's it going to happen, and what will the changes be to the criteria?
You're on mute, Keith.
Oh, you're on mute, Keith.
Sorry about that. What's his space? Firstly, we're sorry for any inconvenience we caused during the period that we had to withdraw. It was incredibly frustrating and extremely unfortunate, and we never want to see that again in the marketplace for anybody. Yes, we have been negotiating with our new funding partner, and we are just about ready to go. So I anticipate that it will be within the next few weeks.
Okay.
We're very excited about it. It will be building upon the success that TML had before with its residential range. And, I have no doubt that we will be working hard with our introducer partners to make sure that we earn the credibility that we had before and providing solutions for people. So,
okay. Great. And one for you here, Mark. Ben Notarangello, I hope I pronounced that right. He's seeing a huge increase in inquiries from foreign nationals looking to purchase investment properties over here, mainly with very limited companies.
Yes.
Is that something? So I know it's something that you guys will facilitate. Is it something you'd want to expand and grow?
It's definitely something, but I'm trying to work with my basically financial crime team to simplify and ask more questions on day one rather than doing it at the last minute. So I think if we can get it right, ask the right questions, and it ticks the boxes, then it can just go through the hopper, no problem. I just find that it's quite difficult sometimes when you go for an application, the customer's paid for a valuation, you've instructed lawyers, and then you find that you know, your financial crime team have highlighted something and who's the shareholder, who's the UBO. I'd rather ask all the questions up front. So we're just trying to automate that process at the moment. And a bit like Keith, watch this space. I think there's something going to be coming very soon, because I do think it's a strong market. Obviously, Brexit is a problem for us and what the impact could be and everything else. But I still think that the UK is seen as a safe haven for overseas investors to buy property. And it's definitely a market we want to be in 2021.
Okay. Aid, what's your opinion on that?
Yeah, look, I think there's a market there for the right lender. We're probably not in that space of foreign nationals. You know, I think an interesting bit to look at will be the expat market in 2021 and whether we see any movement in that. But I think certainly, you know, we've got more than enough to focus on with UK landlords at the moment, which is a problem I'll take every day of the week at the moment, to be fair.
Got it. Listen, we had a question previously from a chap called Tim Rees from Morgan's. So I'll probably direct this one to you if this is okay, Joe. So Tim's got a customer with a retail premises with a one-bed flat above. He wants to convert the property, so he wants to convert the retail premises and the one-bed flat to 2 one-bed flats. And he's got some land at the back of the property as well, where he wants to create an additional 2 to 3 flats. So what are the options available to Tim?
Well, firstly, he needs to ring Crystal. It sounds like on that one, because I mean it's a complicated one. I mean that's the holy grail for me. That one. I mean you obviously got bridging there to split the title, so you can get planning on the land. You can cover the refurb works with that. You can do bridge to let products where it becomes 2 flats. Take some equity out to cover the planning cost and professional fees. Get some dev finance on the land in the background, and take it out again with some long-term debt. So that is a holy grail deal, and if you're not experienced with it, Tim, absolutely speak to a special distributor who is.
You know, I was thinking about that just as you said it, and I think, you know, it's quite interesting. A lot of people think that they want to be a property investor, and then when they want to be a property investor, they want to be a property developer. It comes with lots and lots and lots of issues, and I think what's really interesting is to buy something and convert a shop to a flat is pretty normal. You know, sometimes getting the planning permission on the side of land is basically something that you could do, but potentially selling that land and then letting somebody who's a property developer develop it. You know, a lot of the car crashes I've seen is when people think to themselves, I'm going from this and I've got 26 properties to then building, you know, 5 terraced houses. There's one of 150 things that can go wrong in a development. And actually, sometimes it might be easier for somebody to actually make as much money, if not more, by selling the land on and then getting back to what they're good at and investing that in buying property.
It's a fair point. I think it's a fair point. I think you often see the amateurs get their fingers burnt at a time like this, Mark, and it's, you know, stick to what you're good at sometimes and don't overcomplicate things. But I think to Joe's point there is, you know, it's probably 3 or 4 deals for an expert specialist distributor to help you out at the same time.
There is, and I think on that sort of deal, you need to make sure you've got the right team around you, because again, you know, you just even getting the title structure right, you know, that's the first problem I'm seeing there. Because how many deals have we all seen where they've part built something onto something else, and it's all part of one title, and they're thinking they can ring fence it as part of our transaction. So making sure you got your council list turned, you're not going cheap.
Well, get a good lawyer as well.
Yeah. I suppose, I mean, linked to that complexity of theme, really, Abonit Ray's got a quick question regarding offshore companies without a PG. So, you know, where there's so it's a large portfolio, so, you know, 40-50 million plus, but without the PG up to 75%. So again, it's not a straightforward one again, Joe, and offshore company without the PG, stretching the LTV, but it's a decent sized portfolio.
I mean, when someone doesn't want to offer a PG, we've always got to explore as to why that is first and foremost, particularly if they've got £50 million worth of assets in the background. So, I mean, that deal doesn't sound impossible. It sounds 99% impossible. But I mean, look, we'll have a look at anything. You can't.
That's why I call you the 1% man, Joe.
I know, thanks.
But having a specialist operator, a packager like Joe, you know, there's lots of lenders whose risk appetite is different. You know, from me speaking, let's say, from a private company lender with lots of experience, you know, for me, if somebody doesn't want to give a PG, any more than 50% loan to value, and I'm just not interested. But there are other lenders out there who would be interested. Going back to Joe's question, I would say is, if you've built up a £50 million property portfolio and you're going to pay us, what difference does a PG make? But I suppose having that specialist knowledge that Crystal have, there's a hope for probably most cases, and everyone's got a different risk appetite, and that's what makes this market so exciting.
I mean, they'd have to, my gut tells me 20% PG. If he's willing to give, that, then there's further conversations to be had. If it's really, rubber stamping that is not, potentially, you might need to find some family office in London to look at that deal.
Yeah, I mean, I'll return to the questions again in a moment. I just want to ask about stamp duty, really, and I know it's difficult to have a crystal ball in terms of what's going to happen, but when we look forward to that deadline, and you look at just how many borrowers are going to be involved in having that cliff edge, what do we really think is going to happen? And what are the thoughts? If I start with you, Aid, I know it's difficult, crystal ball, and again, I promise, 1st of April, we won't come back and replay this to you, but what do you think is going to happen?
Look, I am a betting man, I was going to say. So, look, 50-50 on whether they extend it or not. I think the challenge is you can't, the stamp duty holiday has served its purpose. It's G'd up the market. It's given us momentum in there. I sit on IMLA, the Exco, as you know, Jason, as well, and it's something we've debated about. But I think all you can do with that to punters or clients at the moment is flag the potential pitfalls if you're going into it now. If you don't complete, have you got the additional money to cover a shortfall? B, if you're starting the process now, how big is the chain? Because that could impact on it. What's the position with searches? Getting searches on purchases is not easy in certain boroughs. Certainly Hackney at the moment seems to be problematic for getting those back. But realistically, it is a case of going, look, we are now, wipe the next couple of weeks off before you start the process now anyway, because I think most people trying to get a valuation or a survey booked is going to be difficult. But getting it done is going to be tight if you're only starting the process now. And as advisors like Joe and people at Crystal can say to people is, look, we can do our very best. And we as lenders, the three of us collectively, will all do our best to get every deal over the line. We don't want to stop someone completing and getting the benefit of it. But this is not going to be straightforward. And we can do our bit. We can get the offers out. I can speak for our business. We've got the completions teams in there. They will work extra hours like they did the last time there was a stamp duty holiday. They will get deals out the door. But you're in some ways in the hands of the gods once you go to the legals, and particularly if you're in a chain.
Yeah, Mark, and you mentioned before, you touched on bridging, didn't you? And the opportunity there, chain breaks, and there's an opportunity for a bit of a spike, isn't there, with bridging?
There is, and I think ultimately, I'm sure you read about it. We did a £3 million bridging loan in started it at 10:30 on the 30th of October and completed it at 3 o'clock the same day.
Amazing.
Money in the client's lawyers. So specialist lenders in bridging, it is about thinking outside the box. It's about having the lawyers. It's about working with good quality packages, the information that you want. So there is opportunities. But look, I think as Adrian said, I think customers have to think to themselves, is the property worth buying, whether you're paying stamp duty or not? All this thing about, everyone's going to buy properties now. I don't think the stamp duty is a barrier to entry, if I'm honest with you. It's a nice to have at the moment. Anybody who's serious about buying property knows the stamp duty there, has factored it in, and the serious players will continue to want to invest. I think what's going to be really interesting is obviously there's been a moratorium on repossessions. I'm told there's about 50,000 held back at the moment in courts. So I think there'll be lots of opportunities for people to buy properties. Once this demand goes, I think the real people will be going to the auctions and basically bidding on properties where there will be some good deals available, working off a good yield. And listen, long-term investment, I've always said on property, has been proven over time to be the best investment.
And look, I think when we brought back in and then enhanced the criteria in our precise bridging range,
Yes.
We've seen real demand for it. You know, to Mark's point, quick turnarounds. The auction houses are still busy. You know, people going in there wanting to buy them, doing that quick bit of refurb in them and letting them out. As Mark said earlier, there's no shortage of demand if you get the right product to let it out as well. So I think, you know, short-term finance and bridging is going to be really popular next year.
Look,
buying a property has changed because now people, you know, everything's on an online auction now. You've got the whole country to go at. It used to be you had to be in the auction room to buy a property. That's changed. And again, I think auction houses always thought to themselves they'd like to go down the digital route. They probably thought it was 3 years away. Now every auction is online. So it's a fantastic encatchment market.
Look, I think we've been blessed at Crystal having you guys as relationships, because again, I know if we look over the last 3 months, we've had more people use us for the first time for short-term financing, and I know from an education perspective, that first quarter of next year, we're going to have a real focus in, you know, educating, informing, and just trying to collaborate so that we can really just break down any of the barriers, you know, that have been there unnecessarily on the on the bridging side. But I suppose still linked to the stamp duty, Keith. I know we had Louise Apollonio on a webinar a couple of weeks ago. She's very proud of the service standards that TML had been delivering. So I know you're not too fussed about this deadline because the service is so strong. So what is the view? What is the view to the stamp duty?
Firstly, we are planning for it. So I think it's fair to say that, you know, I'd prefer, a bit like Adrian, and we joined an Imola and Amy call yesterday. I think it was, Adrian, wasn't it, or the day before?
I think, day before. I think
we all agreed that we need to start communicating more to advise people. I wish the press didn't always refer to it as a cliff edge, as if it was going to be the blooming end of the world, because it isn't. It will affect some. But the vast majority, like I think Mark said, they've decided to buy that house. If they can get it with the slight benefit of a reduced, effectively, what they've got to provide for, great. If we advise them that, you know, if it is coming to an end, they can make alternative arrangements in readiness for that. You know, and please, press colleagues, let's not try and make it just headlines all the time, you know. So realistically, we are planning for it in terms of watching the pipeline as it grows and making sure we will have the appropriate resource ready, both in pre-offer, although, you know, that's because the timeline has extended so much now. Like Adrian said, if you haven't got your act together now as a customer, you might have missed that boat because of the challenges. But I think we're in pretty good shape to make sure that we deliver when the ask comes.
Okay, great. And Abinit Ray, who asked a question a little bit earlier, also asking about commercial loans in Scotland. So up to relatively low LTV. So I know there's been some movement with certainly one lender looking to offer facilities over in Northern Ireland this year, not necessarily on a commercial basis, but on the specialist side. What's the view about commercial loans up in Scotland, Mark?
All good with me.
Yeah, we've got a few options up there as well. So to be fair, I mean, just again, it comes down to income. So just let's hear around, you know, ongoing business.
Okay. Income and affordability, and valuation, LTV are the key. But, you know, I think the lending market is awash with new and existing lenders who've got an appetite to lend. There's no shortage of liquidity. It's about the quality of the customer, the quality of the asset, the income and affordability, and in bridging, it's the exit strategy. And I think, you know, get those right, there's a fantastic opportunity.
And look, I think I know we mentioned the living through 2007, 2008, 2009 previously. I think it was mentioned early doors, and I think if we I suppose as we emerged through those years, what we all witnessed, I'm sure, was customers who'd had life-changing events which affected their personal circumstances. And I would have thought, when we now reflect back and see how these customer profiles were given opportunities in lending, I would have imagined that they appreciated the second chance. there was a fundamental reason which caused maybe the challenging situation. So we're in a kind of a similar kind of scenario now. So how do we see our specialist criteria actually evolving to really support there's going to be some brilliant customer profiles out there who've just had a mishap caused by an event. So how do we see the product range evolving to best look after those kind of customers?
I think the three lenders that you've got on the panel are all looking to the client's future, not so much into the past. I think we all know these payment holidays these payment breaks that people have taken. We've seen from our book, we are certainly cautiously optimistic at how the book has actually performed, the people that have taken payment breaks and then made payments. But we're also seeing lots of people who've taken 3 to 6 month payment holidays that kind of miss the next date for one reason or another, whether it's the direct debit hasn't been set up or they've got something that they need to do. So I think credit profiles is going to be a key thing. And you've got to get lenders to think outside of the box and look to what the customer's doing in the future. Is their income and affordability sustainable? Is it plausible? What line of work are they in? All these different things. And listen, let's not pigeonhole that if you're in hospitality, you're not going to have a job, because hospitality will come back and there will be big opportunities. And I think lenders just need to look at the sustainability of somebody's income and give people that chance, because you can have a look at the credit profile pre-COVID, and if they were paying everything before and they have genuinely been affected by COVID, those people are good quality people that need to be serviced.
And Keith, as you move from that buy-to-let range, I mean, the key word from Marc there was this plausibility. So as you move from a very, very strong proposition on the buy-to-let side into that residential space, that plausibility word, is that something that's going to run through the DNA of TML?
And it's from all of us in the chain. So from an advisor who's sitting down with the customer, right through to the lender who, and our responsibilities, etc. There is no benefit from us lending to people who ultimately won't be able to afford it. So and a specialist lender is so better equipped, in my humble opinion, to look at various bits of the story of how it happened, what has happened subsequently, looking for a bit more evidence, perhaps, to be able to build that picture to say, actually, we think this is correct. We know some lenders that feel like they don't want to go into retail, but listen, I can't get any wine delivered from Majestic because, and they so I think we need to be flexible. There will be people that won't be able to borrow, and I think as long as we as an industry are fair and make sure that we give people a fighting chance and understand what has happened, I think there will be opportunities for people, but it's not about having a big broad brush that says all of those of you on the left hand side, sorry, you can't, and all of those of you on the right hand side can. I think it's it's tailor-made for specialist lenders such that are represented today.
And Jo, I mean, I know this plausibility and the way you encourage the guys to to make things fit, but obviously really understand the DNA of a deal. I know it's something you invest a lot of time in training with the team. But I mean, what tips would you give the advisors who are out there at the moment when it comes to making sure that they give themselves the best chance of getting deals complete by that stamp duty deadline?
Yeah, I just think common sense has got to prevail. Number one, common sense. So does the loan itself make sense? Does the customer's plan, is it feasible? And you can grow from there, really. You haven't got to be total underwriter as an advisor, but just think through what you're being asked by a customer. Just because they've watched Homes Under the Hammer and they've called you within 30 seconds doesn't necessarily mean it's deal of the week for you. So just that common sense approach. Think like it's your own money a little bit, and sift out the real applications from the time wasters.
Okay,
because we're all going to be busy.
Thanks. Look, I'm mindful of time. We've got literally just 2 minutes, and I think you know, some of the key takeaways for me so far has been that the focus on that technology, focus on transformation, but be optimistic about next year. You know, particularly, you know, the first half of the year. Look into the future, not into the past. I like that. That's your little nugget of the day. That Mark, I'll give you that one. So future rather than the past. We know we're going to have clients who've had, you know, unfortunate circumstances, but there's an appetite amongst the, you know, the three lenders that are here today and the, you know, the panels that we put together, Joe, to make sure we can deliver some brilliant customer outcomes. But I suppose just to finish off, I'd probably just, you know, probably go around each of you and just maybe just ask the one, you know, what would be the one tip we'd give the, you know, the brokers who are, you know, involved in the audience today when it comes to to next year. So you know, maybe whether it's an area of focus or whether it's something behavior wise they've got to do, what would be the tip that would best give them success? And seeing as though you've come onto the screen first, Mark, I'll probably ask you first.
I think, you know what, my word at the moment for everybody, both in my business and it's collaboration. You know, I think it's really important that everybody understands there is a customer at the end of the journey, and how do we make it easier for the customer? You know, somebody who's buying a property, they want to buy a property to either rent out or to live in. You know, it's not so much about the mortgage. It's very stressful for these people. So I think that any introducers using good distributors who understand what lenders want, and from the lender's point of view, just sometimes challenging their own internal processes, policies and procedures to say, is this right? Why are we making a customer do this? You know, and I think for us, certainly, I think since we've been back, one of the things we're talking about is this has got to be the new together. We had policies, processes, procedures that have just gained arms and legs over a number of years. And what we said is, let's start with a blank piece of paper. Why, how, and remember there is a customer. And that customer could be an introducer, a broker, a packager, but the end customer, the things we ask for, the terminology we use, actually most customers don't actually understand it. So think about that when you're having these conversations. And at the end of the day, you know, we've talked before, income and affordability, loan to value, sustainability, plausibility, all those sort of things. I think lenders now need to think outside the box and remember that this pandemic has caused a lot of people to have issues which they wouldn't have had previously, and how we work with them is critical, not only in lending but also in the collections process as well.
Okay, so collaboration and, you know, choosing your partners, really, yes, really wise. Definitely. What about yourself, Aid?
I just keep it, seize the moment, seize the opportunity. 21. I think there's big opportunities for brokers. And look, one of the bits I've learned today is if Jo Breeden can place that £50 million portfolio, pick up the phone to Crystal, because that's a difficult one to do.
1%, Aid, 1%.
I've already sent it, Aid. I've sent it.
I know it's okay. That's Mark's back book. That's one of his payment holiday cards.
It was his own PG portfolio for a minute.
Great. And Keith? Oh, you're on mute, Keith.
I'm going to repeat what I think I said earlier in the year. Back in the early 90s, I worked for UCB on the road, and we were going through a difficult time at that with UK PLC. And I think I went into 2 estate agents, and the first guy said to me, "Oh, the end of the world, you know, pandemic, this, that, and the other, and the phone hasn't rung at all. I don't know what to do." And I went next door, and the guy said, "Oh, it's the end of the world. There's a pandemic. It's all like," but I've been on the phone all day, ringing out, chasing down bits and pieces, and you know, I'm positive, and I'm going to take advantage of what is out there. And that's what I'd say. You know, what the other guys have said. You know, don't be a victim. Go out there and make it happen, and it will. You've just listened to the lenders that have all said we've got appetites to lend, etc. There's huge capital markets out there. Look at all the securitizations that have been done since this all kicked off. You know, so don't be the one that says waits for the phone ring. You get out there and make it happen.
Okay, and Joe, other than telling everyone to send all the cases to Crystal, we're
doing a different way, and we're doing a different way.
So the theme's been, so choose your partners well, collaborate effectively, and make every day count.
Yeah, Yeah, well, I mean, they've covered it all off there, really. But I just think, number one is you're not alone. And I think, in these times when we're thinking about well-being, and you might be working out of a bedroom, you might have a kid knocking at your feet, whether it's about a deal, whether it's finding the right partners to enhance that customer outcome, be it a solicitor, the right solicitor, accountant, etc. Just absolutely remember that you're not alone, and we're all here now as an industry, and this is a great special industry for me to work collaboratively to help you. Get good customer outcomes and enhance and grow your own businesses. So you're not alone. That's my one.
Yeah. Look, I think for me, everybody on this call is passionate about customers receiving advice and supporting advisors. So we put them in a position so they can ensure customers are in the most informed position they can possibly be in. I think look, as we move forward, we'll certainly keep collaborating. Delighted to have the partners we've actually got. I know there's a few questions that we didn't quite get round to, so as I said right at the beginning, I'll make sure we answer each and every one of those and go back to the the audience that did ask the questions. But I'm really grateful for everybody's time, and considering how much we all talk, to only be 4 minutes over the 11:30 deadline is incredible. So look, appreciate everyone, appreciate you all, and thanks for the time today, and have a brilliant Christmas, and speak soon.
Jason, thank you, and everyone be safe and well, and have a happy family Christmas. Take care.
Take care, guys. See ya.
Cheers. Thank you,
guys. Bye.